This stock is being ignored right now, completely off the radar. No analyst coverage, no news articles, no social media buzz. But here's the thing. While everyone was looking the other way, this company, which I'm calling the Weavers of Wealth, just delivered a profit jump of 142% year on year, and almost nobody talked about it. So let's talk about it. So what exactly is this company? Think about the last big wedding you attended in India. The bride's kanjivaram, the mother's silk sari, the festive lehengas, the bridal sets that families save up for. This company is right in the middle of all of that. They're a premium ethnic wear retailer. Saris, silk, bridal, and festive collections, deeply rooted in South and West India. Now, here's what's interesting. There were no flashy headlines this quarter. No management interviews, no big institutional buying. Just steady. Stores expanding, customers returning, numbers improving quietly. That's exactly the kind of setup that gets missed until it doesn't. Okay, but why should you care? Here's the big picture. India's ethnic wear market is projected to cross 1,60,000 crore rupees by 2026. That's not a niche category. That's one of the largest consumer segments in the country. And here's what makes this business model incredibly sticky. Number one, weddings never stop. India sees over 10 million marriages every year. Every one of those families needs ethnic wear. That's not a trend, that's a structural tailwind. Number two, their store count is growing. New cities, new reach, they're not standing still. Number three, repeat customers. Families don't buy silk once. They come back every Diwali, every wedding, every festival. This is a recurring revenue business hiding inside a retail brand. Now, here is what the market is missing. And I want you to pay close attention here, because this is the whole story in one line. Revenue grew 5%, but net profit grew 142%. Read that again. Revenue, 5%. Profit, 142%. That gap, that's the signal. That's not just growth, that's margin expansion. The business is becoming more efficient, not just bigger. Operating leverage is kicking in. Fixed costs are getting absorbed, and every additional rupee of revenue is dropping a much larger share to the bottom line. And on top of that, the biggest buying season of the year is still ahead. Diwali, wedding season, the festive quarter. If the trend holds, this stock could re-rate before the crowd even notices. Let's look at the actual numbers. Simple and clean. Sales, March 2025, 399 crore. March 2026, 419 crore. That's a 5% jump. Steady, consistent. EBITDA, 58.4 crore to 61.2 crore. Again, 5% up year on year. Now watch what happens at the bottom line. Net profit, March 2025, 13.5 crore. March 2026, 32.6 crore. That's a jump from 13 to 32 in 1 year. That's not normal. That's a business turning a corner. And EPS, earnings per share, went from 88 paise to 2 rupees 13 paise. The December 2025 quarter was even stronger at 249. The festive quarter delivered, and even the March quarter, which is typically slower, still printed 142% profit growth over the year before. That's unusual. That deserves attention. Look at this bar chart. March 2025, that small red bar, 13.5 crore. December 2025, that tall amber bar, 38 crore. That's the festive season firing. March 2026, still 32 crore. Still more than double where they were a year ago. The trajectory is clear. The direction is up. So what could actually move this stock? Trigger number 1. The October to December quarter is coming. Diwali, Dhanteras, wedding season peak. This is when silk sari sales go through the roof. If they repeat what December 2025 delivered, analysts will start paying attention. The stock won't stay quiet for long. Trigger number 2. They're expanding into Tier 2 cities. New stores mean new revenue streams that aren't priced in yet. Trigger number 3. One viral festive collection on Instagram or Reels could drive massive brand discovery. It's happened before with ethnic wear brands. Could happen here. Now, the honest risk. I won't sugarcoat it. Fashion cycles are brutal. Ethnic wear is seasonal. One bad festive season, a rainout, a sentiment shift, a fashion cycle change, and sales can drop fast. Also, this isn't a deeply liquid stock. If you're thinking of a large position, the impact cost could work against you. Know that going in. So here's where we land. Early, quiet, profitable. The Weavers of Wealth have already delivered a 142% profit jump year on year, and the biggest revenue season of the year is still ahead. The market hasn't priced this in yet. Most retail investors don't even know this name. That's the opportunity. Now, I'm not SEBI registered. This is not investment advice. Do your own research before putting a single rupee to work. But if you found value in this breakdown, smash that like button. It genuinely helps more people discover these hidden gems early. And subscribe, because the next one is already in the pipeline. See you there.